Let's zoom out for a moment. Forget token prices. Forget short-term charts. Forget crypto hype. What I want to talk about now is what could realistically happen if Zebec becomes a leader in payroll and workforce payments. Not a monopoly. Not replacing everything. Just a recognized, trusted payroll platform in a growing digital economy. Because if that happens, the implications are far bigger than most people realize. Payroll is one of the... Think about the sheer scale of it. Globally, trillions of dollars are processed through payroll systems each and every year. In a large economy like the United States, private sector wages and salaries can amount to hundreds of billions of dollars every single month. This isn't a speculative flow that comes and goes with market sentiment. It's a fundamental economic engine. It's the bedrock of consumer economies everywhere. Every company pays workers, from the smallest local business with a handful of employees to the largest multinational corporations. This process is an absolute necessity. And on the other side of that transaction, every worker depends on payroll. It's not just a number hitting a bank account. It's the foundation of their financial stability. It's the resource that allows them to plan their lives, support their families, and build for the future. This critical exchange happens with relentless regularity. It happens every week, every 2 weeks, every month, regardless of market conditions. While stock markets experience volatility and consumer trends shift, the payroll cycle remains a constant, unwavering pulse in the economy. This reliability is what makes the entire system so valuable. That's why payroll companies are incredibly powerful. They aren't just service providers. They are deeply embedded gatekeepers to this massive recurring flow of capital. By managing this essential function, they occupy a position of immense trust and influence. They sit at the connecting employers to employees and touching nearly every aspect of personal finance. Let's break that down. First, there's the primary source of funds for the vast majority of households, delivered reliably through the payroll system. This income directly enables from daily necessities like groceries and rent to discretionary purchases that drive the consumer economy. Payroll is also the main collection point for withholdings automatically deducted to fund public services, making it a critical piece of civic infrastructure. It's the starting point for where automated contributions to retirement accounts and personal savings plans are often initiated. And finally, it manages, administering crucial programs like health insurance, disability, and other employee perks that are tied to employment. This entire ecosystem is what traditional payroll companies control. Now imagine a new technology entering this space. If Zebec becomes even in this flow, it stops being just another crypto project and starts becoming. It transitions from a speculative asset to a core utility. That's a massive shift. It's the difference between building a niche application and embedding a technology into the foundational layer of the economy. The potential implications are enormous, and it's why understanding the power of payroll is the key to understanding the entire thesis. When we talk about leadership in a market as fundamental as payroll, it's easy to fall into the trap of thinking in terms of total domination. But true leadership, especially in the early stages of a paradigm shift, looks very different. It isn't about achieving 100% market share overnight. That's a vanity metric. Instead, strategic leadership in payroll doesn't mean everyone on the planet uses Zebec. It means something far more strategic and powerful. It means becoming the undisputed center of gravity for specific high-growth and influential ecosystems. It means certain industries, the ones at the bleeding edge of finance and work, actively prefer it. They don't just adopt it. They champion it because it's built on the same principles they are. It speaks their native language of decentralization, speed, and transparency. It means certain companies, particularly the forward-thinking ones, standardize on it. It becomes their default operating procedure. For them, Zebec isn't just a tool. It's a core piece of their financial infrastructure, deeply integrated into how they hire, compensate, and retain talent globally. This is the default choice concept in action. And perhaps most importantly, it means certain workers begin to expect it. In a competitive talent market, the best people have options. When they experience the flexibility and control of on-demand salary streaming, it becomes a new standard. It transforms from a perk into a baseline expectation, giving companies that offer it a significant hiring advantage. Think about the ecosystems where this standardization is most likely to happen first. Web3 companies who need to pay their teams in crypto and manage complex token vesting schedules natively. DAOs, which require a programmable and trustless way to compensate thousands of global contributors based on on-chain governance and milestones. Global contractors and freelancers who are tired of waiting weeks for international wire transfers and losing a significant percentage to fees and poor exchange rates. Remote-first teams who need a single unified solution to pay employees and contractors across different jurisdictions and currencies without administrative chaos. And crypto-native businesses whose entire treasury and operational cash flow exists on-chain, making traditional banking payroll systems completely impractical. If Zebec becomes the in even a few of these key segments, adoption compounds naturally. Each new company that standardizes on the platform becomes a beacon for others in their industry. This effect is amplified because payroll is sticky, incredibly sticky. It's not a consumer app you try for a week and delete. Once a company integrates a payroll system, it becomes woven into the fabric of their financial and HR operations. They don't switch easily. The migration process is costly, risky, and disruptive to the entire organization. They don't experiment casually. Payroll is mission critical. You don't try out a new system that might fail to pay your team on time. And they absolutely do not tolerate downtime or errors. A single missed or incorrect payment can destroy employee morale and trust. In this part of the market, trust is everything. It is the single most valuable asset. And trust takes time to build, transaction by successful transaction, payday by successful payday. But once that trust is earned within these key ecosystems, it creates a deep, defensible moat that is extremely powerful and difficult for competitors to cross. Here's one of the most bullish but overlooked points. Payroll creates recurring usage by default. This is not like DeFi users chasing yields. This is not like traders coming and going. Payroll runs. The true power of a financial platform isn't just its initial product, but its ability to create a self-reinforcing ecosystem. This is where network effects begin to compound, creating a powerful chain reaction that starts from a single, critical business function. Let's trace this journey step by step to understand how it unfolds. It all begins with an employer. A forward-thinking company, perhaps with a distributed global team, needs a modern solution for payroll. They choose Zebec not just for convenience, but for its unique capabilities, like real-time salary streaming or seamless cross-border payments. By embedding their most essential financial operation into the platform, they plant the first, crucial seed of the network. This action immediately pulls in the next layer, the employees. They are onboarded into the Zebec ecosystem, not as a choice, but as a function of their employment. Their income, the foundation of their financial lives, now flows directly into a Zebec account. This isn't a one-time event. It's a recurring, predictable flow of capital, happening every pay period, strengthening their connection to the platform with each deposit. With funds now inside the ecosystem, the path of least resistance is to use Zebec's tools to access them. The employee starts using the Zebec card for daily expenses, groceries, coffee, online purchases. Why transfer money out to a traditional bank when you can spend it directly? Each transaction, no matter how small, transforms the employee from a passive salary recipient into an active, engaged user, deepening their integration. This is the inflection point. With a captive user base that has both recurring income and active spending habits on the platform, Zebec can begin layering in more valuable financial services. Think automated savings tools that siphon off a small percentage of each paycheck, investment options to put capital to work, or even access to credit based on verified income streams. Suddenly, the platform is no longer just a place to get paid. It's the central hub for managing one's entire financial life. The cost and friction of leaving become immense. To switch away would mean untangling payroll, moving savings, closing investment positions, and finding a new spending card. The ecosystem has become sticky. This is how real defensible financial platforms are built and scaled. It's not through fleeting hype or clever marketing gimmicks. It's built through fundamental necessity, starting with the non-negotiable act of payroll. Once payroll, payments, and personal finance are all connected on a single platform, the ecosystem begins to strengthen itself, creating a powerful competitive moat. That flywheel effect is incredibly bullish and extremely difficult for competitors to replicate. Payroll isn't the finish line. Payroll is the entry point. If Zebec becomes trusted for payroll, expansion is logical. Treasury management contractor payouts, business payments, cross-border settlements, financial tools built on top. This is how platforms quietly grow into ecosystems. You don't sell everything at once. You earn trust in one critical function, then expand. That's how infrastructure wins. Quick pause here. If you appreciate deep factual crypto analysis like this, not hype, not memes, not paid shills, make sure you subscribe to the channel and turn on notifications. I focus on real-world utility. Long-term conviction plays where crypto actually makes sense. If that's how you think about crypto too, you're in the right place. All right, let's continue. Let's talk about this responsibly. If Zebec leads in payroll, the network sees real economic activity, usage becomes tied to real work, and wages value is grounded in utility, not just speculation. That doesn't mean price only goes up. That doesn't mean volatility disappears. But it does mean the project is backed by real demand, not just narratives. That's a major difference in crypto. This part is important. Zebec does not need to dominate global payroll. Even a tiny percentage of global contractor payments, Web3 payroll, remote workforce compensation represents massive volume. That's why this opportunity is asymmetrical. Limited downside relative to the scale of the upside if execution continues. Now, let's ground this. Payroll is regulated. Adoption is slow. Competition exists. Trust takes time. Zebec has to navigate regulation, continue building, compete with both fintech and crypto players, educate businesses. This is not a quick win, but infrastructure plays never are. I'm bullish because Zebec is targeting a real problem, operating in a massive market, focused on infrastructure, not hype building products that make sense for crypto. If crypto succeeds outside of trading, payroll and payments are exactly where it should win. If Zebec becomes a leader in payroll, it doesn't just become successful, it becomes embedded financial infrastructure, a recurring use platform, a bridge between work and on-chain finance. That outcome isn't guaranteed, but it's plausible. And in investing, plausible asymmetric outcomes are where the real opportunity lives. This is not financial advice, it's a thesis. Time will tell if it plays out.